Yo, USA crew, listen up right now. Bitcoin is back on everybody's radar, and if you're not paying attention, you're straight up gonna miss the next monster move. We're talking about the king of crypto, BTC, sitting around a jaw-dropping $100,000 mark. Yeah, you heard me right, 103K. But here's the kicker. Institutional flows have slowed down recently, and that's got every trader and whale keeping their eyes glued to the charts. You feel me? This isn't just another day in crypto. This is the moment where fortunes can literally flip overnight, and if you blink, you might just miss it. The market's electric and the energy is insane. People are whispering about potential breakouts, FOMO is creeping in, and honestly, even casual investors are getting that maybe I should have bought yesterday vibe. Now, BTC isn't just sitting still. On-chain data is screaming something big might be brewing. Whale accumulation has picked up slightly, meaning the big players, the ones who can actually move the needle, are quietly stacking while the rest of the crowd is watching from the sidelines. This is classic pre-move behavior. The charts are hinting at volatility ahead, and the US market is buzzing with chatter about whether we're looking at a massive blastoff or a brutal pullback. The question burning in everyone's mind is, are you ready to ride this wave, or are you going to get left behind? This is exactly the kind of moment that separates the people who bag serious gains from those who sit and regret. Think about it. Bitcoin's been flirting with the 103K level, and while some panic at the thought of a pullback, others see the opportunity. Every dip, every sideways candle, every tiny shake in the price is being dissected by institutional analysts and retail traders alike. They're studying supply, demand, whale movement, and market sentiment like their lives depend on it. Because in this market, they kind of do. FOMO isn't just a feeling, it's a strategy when played right. And right now, the energy in the US crypto scene is absolutely electric. Here's where it gets wild. The technicals are showing consolidation, but that could mean a setup for a crazy breakout. Traders in the know are keeping tabs on the order books, and whispers of BTC heading past 105K are flying across social media. Everyone from Wall Street whisper networks to retail hype channels is analyzing every tech. This is why I'm telling you, don't just watch the news, don't just scroll Twitter, pay attention, because the next 48 hours could change everything. And don't sleep on the broader market effects either. Bitcoin's moves aren't isolated. When BTC shakes, it pulls ETH, Sol, AVAX, and even niche players like Filecoin along for the ride. That means your entire portfolio's heartbeat is syncing with BTC's pulse right now. The excitement isn't just numbers on a screen, it's the emotional roller coaster of everyone in the market feeling the tension, waiting for the first sign of direction. You can almost hear the whispers in the crypto Twitter streets. Is it gonna moon, or is it about to tank? But here's the emotional kicker. This is why you can't afford to scroll past this video. If you're in the USA crypto game and you're watching this right now, you have the chance to see what's really happening before it hits mainstream headlines. Imagine being on the sidelines while BTC explodes, or worse, panicking and selling right before a massive rally. That fear, that FOMO, that adrenaline rush, it's all real, and it's exactly what keeps the market moving. Here's the part you need to lock into your brain. BTC is acting like it's gearing up, and while some people are timid, some are leaning heavy into long positions. US-based traders are looking at historical patterns, past halving cycles, and the way whales are stacking right now. And it's wild because even though the news might paint a neutral picture, the real action is happening under the radar, behind the scenes. That's why this is your chance to get the inside scoop, the real vibes of what's happening with Bitcoin. And the suspense? You're about to dive into Ethereum next. The big question there, staking, regulation, and why institutional players are eyeballing it like a hawk. ETH's moves are closely tied to BTC's rhythm, but with its own unique twists, and trust me, you're gonna want to see that. But before we jump there, just picture it. BTC potentially blasting through 105K, the whales quietly stacking, the US retail scene feeling the tension, and everyone asking the same burning question. Are you gonna sit there, or are you gonna move? So if you're watching this, get ready. This isn't some generic crypto news segment. This is the real deal, the kind of content that makes you lean forward, check your charts, and maybe even rethink your positions. BTC is alive, the charts are breathing, and the US market is holding its collective breath. Don't blink, because the next coin we cover is Ethereum. And let me tell you, it's loaded with moves that could make BTC's action look like just the warm-up. Now take a deep breath, stay locked in, and keep your eyes peeled because we're just getting started. BTC is only the opener and the market is sizzling. You're witnessing the buildup, the potential, the fear, and the hype all at once. Stick with me because the next chapter will show you how Ethereum could flip the script and why institutional players are so ready to pounce. The stakes are high, the tension is real, and this roller coaster isn't slowing down anytime soon.
Yo, USA fam! If you're really serious about crypto right now, listen up, because this next segment is everything. We're diving into Ethereum, ETH, and here's the deal. It's about to go from background buzz to headline killer. And if you sleep on this, you might just wake up kicking yourself. Big moves are happening in the US market, and institutional sharks are circling. Stick with me, because trust me, you'll want to be in the game when this one pops. Let's break it down. The Internal Revenue Service and the U.S. Department of the Treasury just dropped guidance that opens the floodgates for staking in regulated crypto funds. We're talking about a massive regulatory milestone that says, yes, funds can stake digital assets like ETH legally and fully compliant without wrecking their tax status. What does that mean for you and me? Big institutional money was sitting on the sidelines, nervous about murky regulation. With this safe harbor established, those same funds can now stake Ethereum, distribute rewards, and tap the yield game while staying legit and US compliant. That's not small talk, that's game-changing. Imagine this. You don't just buy ETH, you benefit from networks validating blocks, staking tokens, earning returns. And now the traditional finance world can join without a compliance meltdown. That means higher liquidity, bigger inflows, and crypto adoption accelerating. But yes, with big risks and big potential upside. Here's a snapshot of what's going on. ETH staking participation has been climbing. People are locking up their tokens, validators are stacking more than ever, and the yield narrative is louder than any hype cycle. Institutional players are circling, recognizing ETH not just as a token, but as infrastructure, an asset with real yield and network effect. The regulatory clarity means that crypto funds in the US can structurally include ETH staking into their products. Up until now, this was a massive barrier. On-chain metrics are showing ETH getting less mobile, more locked. Less supply and circulation typically equals more bounce potential when demand kicks in. Now, here's where the FOMO kicks in. When big money flows into staking-enabled assets, price doesn't just trickle up, it tends to shoot up. Because it's not only about speculation anymore, it's about yield, utility, network power, and ETH is getting legit in that sense. But like always, it's not all sunshine. There are traps. Regulation may be friendlier, but it's still layered with risk. Liquidity rules, custodian requirements, lock-in periods for staking. All these can slow things down or cause pain in a pullback. If you chase without understanding, you could burn. That's why you need to be sharp. Here's what you should watch right now if you want to jump in strategically. The total staking amount on Ethereum. If you see large new capital being locked, that's a green light. Institutional fund announcements or filings mentioning staking or yield via ETH in US regulated products. On-chain behavior, how much ETH is leaving exchanges versus entering. Less supply equals stronger price bias. Yield spreads, when staking yields start to look very attractive compared to traditional assets, that draws in real capital. Okay, so if you're asking, should I pile into ETH immediately? Maybe, but you better have your plan, because we might be near a major pivot. Some analysts are already calling ETH the best positioned major crypto for the next leg up because of this staking pivot. And now, quick suspense pump. In the next chapter, we're zooming into a coin that's flying under the radar, the underdog everyone is quietly betting on. You'll definitely want to see that one. It could be the sleeper hit while everyone's busy chasing the big names. Don't blink, because the market doesn't wait. Stay locked in. ETH is primed, the rules are changing, and the players just found the cheat code. Next up, get ready for the coin that might just sneak past the giants while they're all fence riding.
Yo, USA fam, listen up, because if you're sleeping on Solana right now, you might just wake up wishing you weren't. I'm talking about SOL, the underdog that's quietly making waves while everyone's eyes are glued to the big names. Solana's being called the next millionaire maker by hype traders, and the US market is feeling it hard. You want in? You better pay attention because this one could flip the script for anyone holding. Let's start with the raw numbers that matter. Solana whales are moving, stacking, and positioning themselves in ways they're impossible to ignore. There have been recent multi-million-dollar buys, serious cash coming in showing confidence in SOL's next moves. It's the kind of activity that makes short-term traders perk up and long-term holders smile, because these aren't casual buys, this is strategic positioning. The on-chain data confirms this. Wallet addresses holding more than 10,000 SOL have been climbing, while fewer SOL tokens are moving on exchanges. That's classic accumulation behavior, the same stuff that has historically preceded major upward swings. Now, let's talk tech. Solana is not just hype. The network's upgrades are real. The upcoming Alpenglow upgrade is set to improve throughput, increase compute efficiency, and make transaction costs drop, which is huge for developers and DeFi users alike. More efficiency, more developers, more adoption, you get the picture. DeFi activity is heating up again on Solana. Protocols are launching, liquidity is returning, and yield farmers are stacking SOL like there's no tomorrow. This is the kind of environment where you can see both momentum and utility combine to drive real market moves. But don't just look at charts and upgrades, watch the whales. There's been a notable spike in large SOL transfers to exchanges, which could signal either prepping for a big sell or positioning for a breakout. But paired with staking increases in on-chain accumulation, the smarter bet is that whales are quietly preparing for the next move, not dumping. If you're in the US and paying attention, this is exactly the kind of quiet setup that can explode when momentum hits mainstream attention. Now here's where it gets emotional. FOMO is creeping in. Traders are seeing SOL quietly build its case, and the US crypto Twitter streets are buzzing with mentions of a stealth rally. People who got in early are flexing quietly, and new investors are catching whispers of big moves. You don't want to be that person scrolling past while SOL quietly stacks itself for liftoff. That adrenaline, that feeling of missing out, it's real, and it's exactly what fuels the market during breakout phases. And the narrative isn't just hype, it's backed by activity. DeFi protocols on SOL are experiencing increasing TVL, total value locked, developer engagement is spiking, and NFT projects are returning to the network after a quiet phase. Solana is not just waiting for the pump, it's building the foundation for a serious move. That combination of tech upgrades, developer activity, and whale accumulation is the recipe for potential huge upside. But don't get it twisted, this isn't risk-free. The network has had outages in the past, and price swings are still volatile. If you jump in without watching the signals like staking flows, large transfer patterns, and adoption metrics, you could get burnt. That's why watching the whales and reading the subtle market cues is crucial. Being early is one thing, but being strategic is another, and this is exactly where FOMO meets opportunity. Okay, now picture this. SOL quietly building, whales stacking, upgrades dropping soon, and DeFi on fire again. You're seeing the setup before everyone else. It's like being at the gate before the roller coaster launches. You either hold on and ride or watch everyone else scream past. And trust me, the ones screaming are the ones who got in early and stayed alert. And now, I'm not going to lie, here comes the suspense hook. The next coin we're moving to is Avalanche, or AVAX, and it could trigger the next big move in the market. While everyone's watching the majors like BTC and ETH, this breakout might just come from AVAX quietly heating up behind the scenes. You'll want to stick around because missing it could mean missing the next wave. Solana right now is in that perfect spot. Underdog status, tech upgrades ready, whales accumulating, US market attention rising, and a hint of FOMO creeping in. This is the kind of setup that traders dream about and holders quietly celebrate. It's about knowing the moves before everyone else, seeing the momentum quietly stacking, and understanding the signals before the mainstream catches on. So, USA fam, don't scroll. Keep your eyes glued to SOL's charts, watch the whales, pay attention to staking and DeFi flows, and be ready for the moment when the market finally decides it's time to explode. Because when that happens, those who stayed alert, strategic, and patient will be the ones riding high, while the casuals will be left wondering what just hit them. Next up, we're diving into Avalanche, or AVAX, and a coin that might just be the stealth breakout of this cycle. The setup is heating, signals are aligning, and the potential move could be huge. Don't blink, because the market waits for no one. Yo, USA fam, check this out. If you're chasing the next fast move in crypto, you gotta keep your eyes locked on Avalanche, AVAX right now. We're talking a coin that's quietly lining up for a breakout. The regulators in the US are flashing green lights, technicals are aligning, and if volume kicks in, this could be the one you don't want to miss. You ready? Let's go. Here's the deal. AVAX is sitting right near the $20 mark, a big psychological and technical resistance zone. Right now it's trading under, but the setup is screaming, watch closely. The US Treasury and IRS recently issued guidance, making staking and ETFs for crypto assets much clearer, a move that could unlock serious institutional money for networks like Avalanche. These are legit triggers, not just hype. Institutions have been cautious, but when regulators start giving signals, wallets start opening. Now zoom in for a second. Avalanche isn't just trading, it's building. The network's throughput, enterprise adoption, subnet architecture, all of that is quietly gaining traction. Not as loud as the hype machines, but meaningful. On-chain metrics show C-chain transactions hit big numbers recently, and while some metrics are still weak, the big money seems to be positioning. That means this isn't just another altcoin. This is a contender with institutional backing creeping in. Here's where the FOMO kicks in. The combination of a near $20 breakout zone, looming regulatory clarity, and sub-$20 price level means you're potentially looking at explosive upside from here. If AVAX breaks above $20 with volume behind it, we're talking the kind of move where people say, wow, I wish I got in last week. You don't want to be on the sidelines watching the boards go red while everyone else is jumping in. But don't get it twisted. There are some hazards. The breakout is not guaranteed. The token has been stuck in ranges, momentum is muted compared to the loudest altcoins, and if the breakout fails, we could see a pullback. That's why paying attention to key signals is a must. Watch the volume, watch the institutional inflows, watch for staking or ETF-like adoption triggers. Those are your early warning lights. All right, here's what to watch today if you're taking this seriously. If you see AVAX volume spike and price closes above $20 with good momentum, that's your green light. If you see announcements from major funds or regulated vehicles about AVAX staking or AVAX exposure, that's institutional backing moving in. On-chain, fewer AVAX tokens leaving exchanges, more accumulating in big wallets means accumulation mode. Regulatory and trust signals, if staking rewards, ETF-like structures, regulated exposure start being quoted in connection with Avalanche, that's huge! All right, picture it. You're watching BTC and ETH and SOL making their moves, but here's AVAX, lower market cap, quieter setup, less hype noise, a stealth bomber waiting for its moment. And when it hits, the momentum could surge. People who got in early quietly stack while the crowd chases the loud coins. That's smart play. Emotionally, imagine you bought AVAX at $17, $18 before everyone heard about the $20 breakout incoming headlines. Then you wake up one morning and it's $25, $30. The regret of should have gotten in fades into glad I moved when I did. That feeling? It's potent. That's what FOMO looks like. But you don't want to be chasing that feeling, you'll want to catch it. Okay, so why now? Because the stars are aligning. The US regulatory environment is shifting, staking and ETF opportunities are gaining legitimacy, technical resistance is defined, $20, and price isn't wildly inflated relative to potential upside. That's the sweet spot. Enough setup to be interesting, enough value to be attractive, and enough risk to keep it real. If you're thinking, should I go heavy or just dip my toe? Maybe a tiered approach. You don't want to throw everything in blindly. Maybe start small, watch the signals, and scale if AVAX starts confirming. Because if it jumps too soon without confirmation, the correction could sting. And now, suspense time. Next up, we're diving into the hidden gem that's flying under the radar, the coin no one's screaming about yet, but everyone should be watching. It's maybe the biggest opportunity of the bunch, and once we talk about it, you're going to want to pause and pay attention. Don't blink. So USA fam, don't scroll past this one. AVAX is set up, regulators, tech, network fundamentals all quietly converging. If you want to be early on a potential breakout rather than late, now's the moment. Watch the $20 breakout zone like a hawk, monitor the staking and ETF announcements, and gauge when the market says, go.
Because when it hits, it's not going to knock, it's going to explode. Stay locked in, stay sharp, you don't want to miss this ride.
Yo, USA fam, stop scrolling right now because Filecoin FIL might just be the most underhyped gem in the room. While everyone's chasing the loud names, FIL is quietly building in the shadows, and trust me, you don't want to sleep on this. This is the kind of opportunity where if you move now, you might be the one looking back when everyone else realizes what hit them. Here's what's going down. Filecoin has entered a serious accumulation zone. Big wallets are stacking, on-chain volume is picking up, and the sentiment isn't just retail hype, institutional players are showing interest again. FIL isn't flaring up for nothing, there's substance behind the move. We've seen a breakout past the $2.37 to $2.38 resistance area, signaling that the bear's grip might be loosening. That resistance was tested hard, and now FIL is flirting with the possibility of pushing higher. Now, let me be real. FIL did face some pain earlier. Price dropped below a critical support level around $2.20, and bears were flexing hard. But the way FIL bounced back matters. It rebounded aggressively from the dive, showing resilience. And that kind of bounce isn't just random. It suggests accumulation, not distribution. Some analysts are pointing to a descending wedge forming on the weekly chart, a classic pattern that often precedes strong breakouts when accompanied by rising volume. Big money is not just watching, it's playing. Whale holdings of FIL have reportedly surged, while supply on exchanges is dropping. That means serious players are pulling FIL off the market. They're stacking, not dumping. And when exchange supply goes down, it typically sets the stage for price pressure upward, assuming demand comes back. But what makes Filecoin truly special? What could really make FIL a long-term moonshot is its role in decentralized storage and AI infrastructure. Filecoin isn't just about storing files. It's about enabling the decentralized web. Its network powers data storage for real projects, including AI workloads, large data archives, and massive data sets. With Web3 adoption growing and demand for secure, decentralized data storage booming, Filecoin sits in a unique spot. The Filecoin Foundation isn't just sitting idle either. Their 2025 roadmap shows a laser focus on real-world adoption, funding dev teams, pushing R&D, and integrating with AI projects. They want to make FIL the backbone of decentralized data, not just for storage providers, but for applications that need trustless, decentralized file storage at scale. That's not fluff, that's long-term vision. On the tech side, Filecoin's network has matured. It's not just a storage layer, it's part of the infrastructure for the next-gen decentralized web. As more projects build on IPFS and need cost-effective verifiable storage, Filecoin could be the protocol storing the backbone of Web3. And as AI projects scale, the demand for decentralized, secure, verifiable data storage only increases. Here's where your FOMO should hit. If FIL breaks out past that $2.38 to $2.40 resistance with volume and stays there, we could see a surprising run, not just a pump, a real move. Those who are quietly accumulating now could be sitting on serious gains when the broader crypto world realizes what Filecoin is building. But, and this is a big but, this isn't risk-free. That breakout isn't guaranteed. FIL could fail to hold above resistance or bounce weakly and then collapse. If the whales change mind or if on-chain demand doesn't pick up, FIL could trade sideways or even drop again. This is not a set-it-and-forget-it play. It's a strategic bet. You've got to be ready, ride smart, and take profits when the setup gives you the green light. What should you watch right now if you want to lean in? First, on-chain. How much FIL is being removed from exchanges and how many large wallets are increasing their holdings. Second, volume. If breakout happens, it needs heavy volume, not just whispers. Third, protocol news. Any big partnerships, Filecoin Foundation updates, AI storage deals, these are the real catalysts. And finally, key price levels. $2.38 to $2.40 is your battleground for breakout confirmation. On the downside, support around $2.20 to $2.15 is critical. A drop below could spell trouble, but a solid hold plus volume spike could be the launchpad. Emotionally, picture this. You're watching this video knowing that a few sharp players are stacking FIL quietly. Meanwhile, retail hasn't fully caught on. If you act now, you could be one of the people getting in before the crowd rushes in. That rush, that's what makes or breaks plays like this. That moment when people realized Filecoin wasn't just storage, it was infrastructure. And here's the real question. Out of these top 5 coins, BTC, ETH, Solana, AVAX, and FIL, which one are you going all in on? Are you chasing the momentum, or are you hunting the under-the-radar gem? Because FIL might just be the hidden king if you catch it in the right moment. Don't wait until this video is old news. This could be the setup for something huge. The next move could be massive, and if FIL breaks out, it'll catch a lot of people by surprise, the ones who didn't believe in its long-term vision. But you're not just watching. You're preparing, you're stacking, you're ready. So here's where we leave it. FIL is in a stealth build mode, strong accumulation is happening, and the infrastructure thesis is real. If it breaks out, it could be the most rewarding story of the cycle. Or it could fail if support breaks. Your move, lean in if you're confident, or stay alert if you're cautious. Either way, don't sleep on this. Which one of these 5 coins are you backing for the long haul? Because FIL might just be the hidden king if you catch it in the right moment.